Is to show you how you can enter trade, exit trade, some few strategies, how to put stop loss, how when to put TP, all those general things about trading. Because trading, you need some basic knowledge. Just you need basic and also need advanced knowledge, because basic alone won't help you. So for this Zoom session, we'll be discussing some few things. So let me start with volatility 10. Volatility 10 is about to go up, and I've been talking about higher highs and higher lows. So before even start trading, you need to understand those higher highs, the way the market move, because the market, like here you can see, like here the market was moving in a downtrend, and it was moving in higher lower low, and then higher low. So what I'm talking about is this. This is the lower low we are talking about. When it's going down, it's making this lower low. So this is what we call lower lows. And then on the upper side, we call this is higher. So this will be higher low. This will be higher low. This is also higher low. So it is dropping. That's how it's making lower low, higher low. So it has been dropping and making those levels. So this concept is very important, because when the market is changing the direction, it start making, like here now, it's changing the direction. It's now about to make a new higher high, because now we are going up. It need to make a new higher high. Then on the downside, it's making a new lower high. So it's no longer making lower low, it's now making lower high. So it's like this. Yeah. So see how it's moving. Then it just made the lower high. So we just need a new higher high. So probability of making a new higher high is high, because we already have a lower high. So it's going for a higher high. And this is what we usually look in the market, how the market moves. That's this what we call the price action itself. Because if you don't understand the lower high and a higher high, you won't be able to predict exactly where the market is going. So very crucial. Make sure you understand higher lows, lower lows, because that's the price action, the way the market moves. Okay, you have just understood that. Then you need two indicators. You need an indicator that will show you overbought and oversold conditions. So you need RSI. You can use RSI. You can use, like here, I usually use RSI 21. It's the best. RSI 21 is always my best. I've been using it for almost 2 years now. I've never changed it, and you have seen it. I've never changed it. The only thing I change mostly is these values. If I need 90, 100, or 15. So like 15 and 85. But this mostly when I want to catch a spike. So I use 15 and 85 if I'm predicting a spike will come, so I can close my trades. Okay. So but RSI 21 is the best. But you can also create your own. You can also create your own value. You can say 24. You can put 24. You can put 25, based on. But don't go lower than 14. Don't go lower than 14, because it will give you choppy overbought and oversold. It will lie to you that the market is at overbought, yet it's not ready to go up. Like you can see my RSI 21, the way it's behaving. It's behaving very nice. Whenever it touches 30, there's very likelihood that it's gonna go up. Whenever it touches 70, okay, so let me show you. Whenever it touches 70, and see here, whenever it touches 70, there is high chances it's gonna drop. So you need an overbought and oversold indicator. You need an oscillator. Okay, you can use, even MACD is good, but MACD mainly is, you can use MACD mainly for entries. Okay, but RSI is good. Then the other thing, you need an indicator for entry. Yeah, you can use MACD for entry. Let me show you how you can use. I usually use parabola. Okay, for entry. So I won't put my parabola because it has my setting. It will show, but I can use yes, that is later. MACD. So MACD has specific values. The default, you can change the default so that you can get exact. So this is the MACD, but this is not the default. This is one that I was coming up with. So I know how you use MACD. So whenever it broke the zero line up, it's a buy. You see, so you enter there. So this one way of getting into a trade. This is my value. This, you can see, this is 1281. This is something that I was creating on my own. So this is not default setting. This is something that I created on my own. So whenever it crosses, MACD crosses, I just know that's the signal for a buy. So around this area, I just place my buy. Okay, so that's how you can use indicator for entry. Another thing that I like entering the trade with is the trend line. Whenever I draw my trend line, so I need 2 points to draw my trend line. So like in this case, this is point A and this is point B, and you can see how the market made, I think this a head and shoulder. So you can see this head and shoulder. So when it broke this trend line here, and I've just talked about lower highs and lower low, lower highs, high highs, things like those. So this is a new lower high. So we are looking, the market is finding, it is going for a high high. That's why it's moving up. So we need a high high around this area. So it's going to make this high high, which will be higher than this, because this is the high, but we are looking for a new high high. So we're expecting something like this. You see, so that's how the market is moving. So once it has broke that trend line, so once I broke this trend line, so I just have to buy. So wait for this candle to close, then I can trigger a buy. Then where is my stop loss? My stop loss will be here, just a little bit here. So because if the market make a new lower low, it means my stop loss will be hit, and that means that the market is changing direction. Remember about high highs and high low. Please go and read about those high highs, how the market moving. So that's why I put my stop loss here. If it makes a new lower low, it means now that my stop loss will be hit, and that means that the market is not going on uptrend anymore. Now it's changing to downtrend, and that's why I need to put my stop loss down here. So for stop loss hunting, because broker know that we usually put stop loss around this level here at this support. So for stop loss hunting and avoiding stop loss hunting, you just have to move a little bit down. Don't put exactly, because you can drop this market, take the stop loss, and then move back up. So it's a mind game. So just move a little bit down, and then calculate your risk to reward ratio. About TP, so my TP will be in the next the nearest, I'll just calculate like 1 to 1. So from here to here and here to here, that's 1 to 1. So I just put somewhere that there is strong level of support or resistance. So I believe here is very strong level of support, and it may come back this level and retest this level and then drop back down. So this will where will be my TP. Okay, my TP can also be around this area. This is where my TP can be, but this is not 1 to 1. But around this area, I'm also considering taking some profit, because also this area is a strong level of resistance. To see how the market will be behaving around this area, move my stop loss, and then wait. If gonna break this area here, my take profit will be around that level. Okay, so that's how professional do. So I've just used trend line to enter. You have seen this is one now. You can draw a trend line based on any time frame. You can use 4 hours, you can use 15 minutes. Okay, if you have any question, please let's continue with questions. You can just ask now.
But I want to ask a question, but it's out of what you've taught.
Okay,
can you tell us about candlestick patterns? Because I've been studying that for some few days now.
Candlestick patterns. Okay.
Yeah.
Okay. About candlestick patterns. the main candlestick that I like, or the candlestick that you will see and it is showing that the market is ready to change direction, is rejection. I don't know if rejection is candlestick pattern, but sometimes they call it hammer, hammer, inverted hammer, shooting star, I don't know, something like that, something like this. Just ignore the rest. The rest have no meaning. No? Just mostly look for something like this, a rejection, something like a rejection. Yeah. So this is, I think this is inverted hammer. Inverted hammer. There's also another one here. This is mostly what I usually look for. Inverted hammer. Kind of rejection and kind of. So when you see these rejections coming in, it means that, like this one, it means that the seller are no longer more, so the buyers are taking over, and you can scalp the next candle if you are a scalper. Okay, very important. And two, when this type of candlestick pattern, this kind of candlestick, when it happen at strong level of support, okay, when it's happen at strong level of support or resistance, they have a lot of meaning, so you can enter there. Another thing, if the market has been trending for a while, see one here, when the market was trending down, trending. Okay, I'll just zoom in a little bit so that you can see it here. You can see here the market was dropping, and you can see another one here when the market was deep going up. So this happened, and the RSI, you can see where the RSI was. The RSI was 70. That's another confirmation. You don't take anything that's just come because you just seen any hammer or any inverted hammer. It does not mean that, or any reject, does not mean that it will play the way you want. You also need, I've just talked about RSI, the overbought and oversold. You also need support and resistance. So like this one, it was happening at 70. You can see it was happening at 70. So it came a nice rejection. At this particular moment, you need to get into a sell. So just have to take a sell here, and then the market dropped. When the market dropped, it reached at this level here, this level of support. Then there was another one, a kind of rejection. So we wait for the next candle to close, like this one, wait for the next candle to close bullish. Once they have closed bullish, you enter, then you take your profit, and don't go for, because this type of reversal, they don't go for big move. Make sure you just go for one-to-one. Like you could have entered here, your stop loss here, and then your tip here. Don't go for big move. They don't generate big moves. Like this one, you can see this one didn't generate big moves. Okay, so very, very important. But the rest, I can say don't consider the rest. Just they don't play very well. But these ones, this is what professionals usually look for. This kind of rejection thing. This kind of, yeah, very, very important. And when they play at support or resistance, they are very nice. Or when RSI is at overbought or oversold, at least from there you can really be sure of 70% accuracy. So, but other candlestick pattern, no, you can't just waiting for those things. But these are best. I can say these are the best. This is what I usually look for, and this is what professionals are usually looking for. The rest are just wasting your time. Even the doji itself, the doji nowadays, they don't play any role, but these ones, they have meaning and they make sense. So I think I've answered that question. Okay, so the other question was which of the method you discuss above do you normally use for your entry? I usually use trend line. Just place a buy order here now. Let me increase my lot size. So I'll just place a buy because the candlestick closed above my trend line. So I just place my TP there. That's $22, and then my stop loss another 22. My stop loss around 22. So I just place on a safer side. I place at 22. So that is $22. If I win, I win 22. If I lose, I lose 22. This is 1 hour time frame. So I'll not be watching this every time because it will take a lot of hours before it reaches my TP. So any other question, please? Arize?
Yes.
Yes, you can ask any question about this trading thing.
I'm just following you. I'm just following what you're saying. No question so far.
Okay. So I've just explained why I entered this trade. So this is how we trade. So for instance, if you get 10 setup looking like this, so I'm very, very honest that 10 setup looking like this, you're gonna win around 7 or 8, or even you can win 10 out of 10. And this is what I usually look. So when I don't send signals, it does not mean that I'm not trading, but I'm waiting for something that it will give us high chances of winning. Because this thing, you just gonna wake up in the morning, start buying. No, you are looking for something that it will give you high chances of winning. And that's why there's difference between professional traders and new traders. So don't get upset when I don't send a signal, because actually there's none. I'm just waiting for market to make what I want to see. So I'll go to the chart and I see, okay, please, how do you calculate dollar value easily on the chart? Is there a tool for that?